If you've been watching the charts lately, you've probably felt that little stomach drop moment. I mean, after hitting some incredible new highs, both Bitcoin and Ethereum took a pretty sharp dive, and it's left almost everyone asking the exact same question.
So what are we looking at here? Is this just a healthy, totally necessary pullback before the next big move up? Or are these the first real warning signs of a much deeper crash? That's the big question, right? And it's exactly what we're going to dig into in this explainer.
Here's how we'll do it. First, we're going to take the temperature of the market. Then, we'll dive deep into the case for caution, the bearish argument. After that, we'll hear the bullish rebuttal. Then we'll get super specific on the key price levels everyone is watching. And we'll wrap it all up with how the experts are actually trying to navigate this mess.
You know, right now, the market feels like a total battlefield. You've got fear on one side, hope on the other, and a whole lot of conflicting signals creating this environment of just extreme uncertainty.
And this right here, this is the price action that has everyone on edge. That incredible rapid climb to all-time highs was amazing, but it was followed by an equally fast drop. And that kind of move, well, it definitely shakes your confidence and puts the entire market on high alert.
Okay, so let's start with the bearish side of things. Let's look at the arguments from analysts who are basically flashing yellow lights and urging everyone to be careful. They're pointing to some pretty classic technical signs that suggest we could be in for more pain.
Analyst Tia BTC really puts it bluntly here. The idea is that if we break below those key previous highs, this might not just be a simple dip. No, this could be the very beginning of a major distribution phase. That's just a fancy way of saying the smart money, the big institutions, are starting to quietly sell off their holdings. And that means we wouldn't be at the end of a drop, we'd be at the very, very beginning.
And these points, they really start to paint a concerning picture when you put them together. For instance, Cake Baba has noticed that every little attempt to rally has just been smacked down by sellers. At the same time, analyst Bichain Darren is worried because Ethereum has just fallen like a rock without any of the healthy bounces you'd want to see. It all ties into this fear that we might be forming what's called a distribution top, which is a classic technical pattern that often screams market peak ahead.
All right, but hold on, that's only half the story. There are a whole bunch of other analysts looking at this exact same price action and seeing something completely different. They don't see a threat, they see a necessary and maybe even a healthy market event. And this quote from Yufu Liao Bi really gets to the heart of the long-term bullish argument. The idea is so simple. All this daily price chop, it's just noise. The real signal is what happens when you zoom out. And when you look at the major trend indicators like moving averages, they smooth everything out, and they are still pointing decisively up. The fundamental trend, in his view, hasn't changed one bit. And here's another key reality check. As analyst Bichain Darren points out, after a bull run this strong, a complete and immediate V-shaped collapse is just super unlikely. That's not really how markets work. True market tops tend to be slow, messy affairs where they kind of roll over. They don't typically just fall off a cliff overnight. So if it's not a crash, what is it? Well, for the bulls, the answer is simple. It's a cleansing. This volatility is seen as a deliberate, calculated move to shake out all the speculators, all the people using way too much leverage. It wipes their positions off the board and builds a much healthier, stronger foundation for the next massive leg up in the bull run.
Okay, so we've got the bull case and we've got the bear case. So now it really just comes down to the numbers. This is where the rubber meets the road. The market is going to prove one side right, and it's all going to happen at these very specific price levels that analysts are watching like hawks.
For Ethereum, the first line of defense is right here, at 4160. This is the bottom of a really key zone. For the bulls, holding this level is absolutely critical.
But the real line in the sand, the ultimate floor that pretty much everyone agrees on, is $4,000. It's a huge psychological number, and if we break below it, that would be a major, major blow to the entire bull case.
Now let's switch over to Bitcoin. Some analysts are looking right at this level, 112,000, as that prime shakeout zone we were talking about. For them, this is a spot you watch for a potential bounce, maybe even a place to consider buying the dip.
But this is the big one, the truly critical level. The point of no return for a lot of traders is just a hair below it, at $111,870. Why? Because this was the breakout point from the last high. If the price closes below this and stays there, well, in many people's eyes, that confirms a much deeper downturn is coming.
Okay, so you know the arguments, you know the key levels, but what in the world do you do with that information? How does this all translate into an actual strategy? Let's break down how analysts are really approaching this market right now.
And you really see two main mindsets emerging. On one hand, you have the patient trend follower, kind of like Yu-Fu Liaobi. They have strong conviction in that long-term trend, and they're not getting shaken out by some short-term noise. Dips are for buying. But on the other hand, you have the level-to-level trader, more like Cake Baba. They're more cautious, they're not trying to be a hero and catch a falling knife. They are waiting for the market to prove itself by taking back a key level before they're willing to jump back in.
But here's a fantastic question. What if you're already in a trade, sitting on a nice profit? The fear of giving all that back is very real. But if you sell everything, you might miss the next massive rally. Well, analyst B. Chandalina shared a really innovative strategy to solve this exact problem.
Okay, this is super clever, so let's walk through it. Imagine you have a profitable futures trade. First, you set your stop loss right at your entry price, so you literally cannot lose your initial money. Okay, step 2. You place a separate order to buy the actual crypto, that's a spot order, at a price just above your stop loss. And here's the magic trick. The amount of crypto you're buying is equal to your unrealized profit. So what happens if the price crashes? Your futures trade automatically closes at break-even, so you lose nothing. But your spot buy order gets filled. You've just converted your paper profit into a long-term holding that you bought at a great price. It's brilliant. It turns a defensive move into a strategic one.
So when you boil it all down, when you synthesize all the different analyses we've looked at, a pretty clear picture emerges. In the short term, yeah, there's a lot of caution. The risk is definitely real. But when you zoom out, that long-term outlook from these analysts remains overwhelmingly bullish. And so the recommended action isn't panic selling, and it's not aggressive buying either. It's patience.
And that really leaves us with one final thought, doesn't it? In a moment just like this, when the charts are screaming in both directions and the experts are divided on what happens next, maybe the most powerful tool in your arsenal isn't some complex indicator or a bold prediction. Maybe, just maybe, the winning strategy is having the discipline to do nothing at all and just wait for the market to finally show its hand.